Cal started off back in 2000 as a primary dealer trading in government securities, a very niche and focused area. We ventured into stock brokering, then investment banking and asset management. We are one of the leading full-fledged investment banks in the country with an annual footprint close to $2 billion. We are one of the largest non-bank primary dealers in the country. We are one of the top 2 stock brokering companies in the country. Asset management perspective, we manage close to about 250 billion rupees in terms of wealth for our clients. Our digital platform, which we brought in the last couple of years, we are now catering to close to about 35,000 clients through our platform. Cal started off back in 2000 as a primary dealer trading in government securities, a very niche and focused area. But early on, we realized there's a broader market opportunity out there, not to serve clients just for trades, but to create an overall investment and capital market ecosystem that could serve a wider range of audience. And from there onwards, we ventured into stock brokering, then investment banking and asset management. And in 2021, we entered Bangladesh, where we operate in 3 of the 4 verticals that I mentioned. And what made us different and what led our growth in the last couple of years is our deep understanding on the markets that we operate in, a data-driven approach to investment decision-making, which has yielded above average return for our clients, innovation-driven culture, and a very energetic young workforce, which is creative and innovative in terms of the approach that they bring to the table. So looking at today where we are one of the leading full-fledged investment banks in the country with an annual footprint close to $2 billion. We are one of the largest non-bank primary dealers in the country. We are one of the top 2 stock brokering companies in the country. In a post-war scenario, we are the largest in terms of the largest amount of equity and debt raising in the country. And from an asset management perspective, we manage close to about 250 billion rupees in terms of wealth for our clients. From a clientele perspective, even though our focus is family business and HNIs, our digital platform, which we brought in the last couple of years, we've been able to broad base our clientele, where we are now catering to close to about 35,000 clients through our platform. Cal's vision is to be the #1 frontier investment bank. Our purpose is to foster growth in these frontier market economies by efficiently allocating resources through the capital markets. So when I say frontier markets, we are looking at countries where capital markets are severely underpenetrated, but the growth potential is extremely high in terms of where they stand in terms of GDP growth, the size of the population, and the prospect in terms of what we expect in the next 5 to 10 years. We already have presence in Bangladesh, which we started operations a couple of years ago. And now we're looking at adding a 3rd country in the next 12 to 18 months. From a broader vision, our expansion will not be restricted to regional presence alone, but we're also looking at increasing our market size in the local market. So from an overall perspective, I would think we'll be looking at close to about $5 billion footprint in the next 5 years. We are looking at an overall connectivity between the markets that we operate in, where we can channel funds from developed countries into these frontier markets that we're talking about. And also not only money flowing in from developed markets to frontier markets, but also within the frontier markets. Let's say, for example, if a Sri Lankan company wants to venture into Bangladesh, or a Kenyan company wants to enter into Bangladesh, or vice versa, we can facilitate through that platform in the next couple of years. And also, we want to kind of bring in the same full-fledged investment banking solution to all these countries that we're operating in. In Bangladesh, we are in 3 verticals of the 4 that we're operating in. We are not yet in primary dealing. But overall, over time, we want to be in a full-fledged investment banking kind of sphere in the next couple of years. And which will mean that the connectivity across countries will improve. And that will mean that the markets will grow. And we also foster economic growth in these frontier markets that we are talking about. I also want to say that the IPO is not just another financial event. It's a strategic milestone to our company going into the 25th year of operations. We are looking at making the IPO the center stage for preparing for our next stage of growth, where we are looking at the broader frontier market expansion that I spoke about, and giving broader investor participations to the investors who participate in the IPO. So the IPO is centered around three strategic verticals. One, market expansion into other frontier markets. Two, increasing or growing our digital footprint through our digital platform offering. Number three, growing our balance sheet, and that is through prop book trading and also increasing allocation to other assets. If I dig a little bit more detail into the three verticals, from a regional expansion perspective, as I mentioned, we will be entering another third country within the next 12 to 18 months. And thereafter, keep looking for more investment opportunities. And the decision to enter into a third country was not something that we decided overnight. There's been a lot of research and data that we've looked into these countries. We've visited these, we've done our due diligence, and that's how we're making a call into these frontier markets that we're entering into. Secondly, from a digital footprint perspective, our digital platform, which is now facilitating over 35,000 clients, we want to take the same platform to other markets that we're operating in, to Bangladesh, and also the new markets that we'll be entering in. And also, with the given growth in terms of what we are seeing in the local market, growing at more than 40% per annum in terms of retail growth, we also want to strengthen our information security. We want to add more products in terms of features, and also introduce more innovative financial products that the retail market can also participate in. From a third strategic pillar comes in the form of increasing our prop book and growing our balance sheet, because we need the balance sheet to keep continuously growing and investing in these frontier markets, which will mean that we will look at multi-asset allocations, looking at increasing our exposure to broker credit, investing in private equity deals, or else investing in any asset class which has lack of liquidity, where we can be market makers for those particular type of instruments, and also new type of structured finance products that we introduce to the market. So our objective is centered around those three pillars, which will help us achieve or work towards achieving the frontier market investment bank objective in the next 5 years. Our next frontier market destination will be East Africa. We will start off with Kenya being as an entry point to East Africa, and then gradually increase our presence over East Africa. In terms of size, we are talking about a GDP potential of we are serving about $400 billion in terms of an economy, which is almost 5 times the size of Sri Lanka. In terms of population, you are talking about 600 million in terms of population, which is almost 30 times the size of Sri Lanka from a population perspective. And you're talking about a young and vibrant population. The region is growing at 5.5%. Compared to the rest of Africa, East Africa has relatively low amount of political uncertainty. Yes, it has its own problems in terms of fluctuations and volatility, but relatively more stable compared to the rest of the African region. And from a population perspective, especially talking about Kenya, you're talking about a young and vibrant population. We have very similar kind of cultural similarities with Sri Lanka. Some of what's happening there really looks like what Sri Lanka went through 10 to 15 years ago. So there's a resemblance in terms of what we can kind of take from Sri Lanka and kind of implement in Kenya. And there's a lot of multinational presence, a lot of DFIs being there. And it's closer to the Middle Eastern region, which kind of helps us to connect with a lot of the DFIs to the region. And from a Sri Lankan perspective, we're also seeing a lot of Sri Lankan companies trying to enter Kenya and East Africa. So we have the opportunity of facilitating companies from Sri Lanka and Bangladesh into the East African market as well. So overall, there's a lot of things happening out there right now. The growth is good, just that we have to be in there in the right time. And that will ensure that we kind of place ourselves to have the right products. It's a less sophisticated market, but has market potentials. For example, the deal sizes are sometimes 4 to 5 times larger than what we see in Sri Lanka. So the potential is there. And that's what we want to really capitalize on. Digital innovation is the backbone to CAL strategy. For example, the CAL portal, which we introduced a couple of years ago, today has grown into a platform that accommodates more than 35,000 clients. And this year, we've almost onboarded 10,000 clients into our platform, managing almost 500 billion in terms of assets through the platform, either through government securities or through unit trusts. Also, in terms of growth, we've been growing at 40% per annum in terms of retail growth. What we aim to do is obviously to introduce more products to the platform. And also the penetration that we are seeing in the other markets that we are planning to enter or have presence already, like Bangladesh and Kenya, have a larger mobile banking penetration. compared to Sri Lanka, which is at 20% versus 50-70% that we see in Kenya and Bangladesh. So there's an opportunity already out there to kind of take our products and implement in these two markets that we are trying to enter, and Bangladesh, where we already have presence in. From a digital perspective, we also look at, we categorize our strategy into three. One, how digital innovation can increase our retail audience. Number two, how we can increase our operational efficiencies through digital. And number three, how our investment decision making can be made better using the digital platform. If I were to elaborate a little bit more on those three pillars, from a retail audience perspective, obviously, as I mentioned, there's enough and more potential to increase our base. And in Sri Lanka, we are talking about a 20 million population. So easily the digital clientele base could grow to about 10 million over time, if we were to match what Kenya and Bangladesh is as of right now. Number two would be on an operational efficiency perspective. Now, growing retail book shouldn't necessarily increase our back-end pressure that we see on the back end. As I mentioned, we've grown our AUMs and the business that we do by 30x over the last 5 years, but only increased our staff count by 30%, from 120 to almost 160 or 170 right now. So the growth in terms of retail doesn't necessarily mean that we have to increase our effort in terms of what we do on the back end. And that comes through the operational efficiencies that is brought through digital innovation. So by continuously looking at where we can improve on digital innovation, adopting technologies, and focusing on data, understanding client data, we feel that the operational efficiencies could be made much more better, and that could allow us to scale up the business to a larger extent. From a third perspective, in terms of how digital innovation will drive better investment decision making, we invest heavily on data. We gather a lot of primary data. There's a lot of focus given on macro forecasting to figure out what's going to happen, figuring out how investors behave. And that kind of all goes into the investment decision making that we are carrying out right now. We are increasing the effort put into this area because we feel in the next 5 years, the data capability that we build will bring us a competitive edge, not only in Sri Lanka, but in the region as a whole. And by doing that, what we've been able to do in the past is being able to predict, make those market calls, and generate above average returns for our clients. And we aim to continue to do this not only in Sri Lanka, but also the other frontier markets.